G'day there viewers, and welcome to Purchases and Purchases Returns. This is chapter 7 of the Osborne books. This chapter will be similar but opposite to chapter 4, Sales and Sales Returns. So let's have a look at the objectives. We're going to look at the stages of accounting, we're going to look at the books of prime entry, we're going to look at the reasons for using books of prime entry, then we're going to look at entries, some entries, we're going to look at Analysed Purchases Daybook. So these are the stages of accounting that we've been through before. So you've got a transaction such as a sale, payment of wages, then you've got the document that goes with it such as invoices, credit notes, remittance advice, then you've got the book or prime entry such as sales daybook, cash book, purchases daybook, then you've got the ledger accounts, so you've got the purchase ledger control, the sales ledger control, then you've got the trial balance, which is a list of all the accounts such as wages, assets, liabilities, buildings, etc, etc. Let's have a look at some credit purchases. So these are the transactions, for the credit purchases. So first of all, you got purchase, then you got the invoice, the purchase daybook, purchase ledger control. So purchase ledger is just a list of all the suppliers that you've got and the invoices that they've got that relate to them. So these are the and remember the purchase ledger control is the totals accounts. So just have all the totals there. So let's have a look from an invoice to a book of prime entry. So this is an invoice from a supplier, so it's from Harvest. So we write Harvest here where the supplier is in the purchases daybook. We've got the date 11th of the 14th, and then we've got the amount, which is 552. Then we've got the amount due, which is £93.60 there, and then the VAT amount is there, and then the £90 which is there. Okay, let's carry on. Books of prime entry, so you've got the purchases daybook, and then you've got the purchases returns daybook. These are the books of prime entries for purchases. Reasons for using the purchases daybook. So the purchases daybook is basically a list of all the invoices that you receive from your suppliers, and then someone takes a list of all of these, and then another person normally would enter them into a double entry system. The reason for this is that the person that's entering them into a double entry system can check them before they're entered. So that way no errors are carried forward. Also, this thing called segregation of duties. So segregation of duties that more than one person is doing the duties in the accounting system. So if there's more than one person, then it requires more than one person to commit the fraud if there is any fraud that's about to take place. So there have to be inclusion. So if one person was just doing it, they could just commit fraud and get away with it. But if one person does it, then the other person would normally notice that another person is committing fraud. So then the other person can do the double entry. So for example, if you've got a larger accounting system, then you need more than one person to do a role. So one person can do the sales daybook and one person can do the entries into double entry system. That way obviously the workload is shared rather than one person doing everything, and in a larger company that's what you need. So this is what a purchases daybook looks like. You've got the supplier, and then you've got the amounts, and then you've got the invoice numbers that relate to those suppliers. And this is the purchase ledger. So each supplier has their own account in the purchase ledger, and it's got their totals amount. So if they have got more than one invoice, then they will be listed here. So sales daybook to the general ledger. So here, these are all the amounts in the sales ledger, and the totals figures are carried forward to the purchase ledger control. So yeah, I think I said sales, but it should be purchase ledger. And then you've got the net here, and then you've got the VAT amount there to carry forward. So credit purchase returns. So then you've got a purchase return, and then the credit note, which is the opposite of the invoice. And then you've got purchase returns daybook. Then you've got the purchase ledger control at the bottom, and then the purchase ledger, which is the individual supplier account. So this is purchase returns daybook. So purchase returns daybook, here we've got a return of £20. So a 40 goods here was made of £20. How would this look? So this is how it would look. The £20 would go the gross amount, and then the net amount and the VAT amount you need to work out. And how would this look in the actual ledger accounts? It will go like this. So you've got the £16 there, the £20 on that side. So these entries will be the opposite of the sales ledger. So these that we had before. So this £4 here. So the purchase returns and the sales returns will be the opposite, basically. Okay, let's carry on. So this is analysed cash purchases book. Purchases day book. There's also analysed cash book and analysed sales day book as well. But this is analysed purchases day book. So basically, say the reason for using an analysed purchase day book. Say we had a car company and we set up sports cars. So our normal cars that we sell day to day could be purchase type 1. So this is the purchases that we made for purchase type 1. And then say if we had sports cars. So this is the amount, £50, £50 altogether that we made for sports cars. So this is the way that you can analyse your purchases to see basically extra information that you need, which is basically an analysed purchases day book. Okay, I'll see you in the next lesson. Thank you for listening. Bye.